I'll ask you to go back to your seat, and I'm going to invite now Nasir Alam to the podium. Nasir Alam is from CaixaBank. He's got more than 25 years of experience in the financial sector. He worked in the corporate finance unit at Deloitte in the UK, where he actually took part in valuing businesses, in business modeling, in financial due diligence, and he also was an advisor in the structuring of financing of firms. He joined Caja Madrid in 2004, where he became director of the division of project financing, and he's now the director of a very relevant area for this presentation, which is the mergers and acquisitions unit and CaixaBank, where he has actually taken part in the structuring and the execution of a lot of operations in diverse sectors with special emphasis on renewable sectors. He has got a degree in quantitative economics from my alma mater, the Universidad Complutense de Madrid, and he is also a member of the Institute of Chartered Accountants in England and Wales. So without further ado, Nasir, the floor is yours.
Thank you so much, Andres.
There you are.
Thank you. So first of all, I'd like to thank the Cañada Blanch Foundation for giving me the opportunity to talk at this very interesting forum. So I basically will give a brief overview of how the cross-border M&A market has evolved over the recent years. Cross-border M&A is a very relevant part of global FDI. So if you take an average of the last 10 years, it's about 30% of global volumes. And if you take advanced economies, it is about 70% or over 70%. So a very relevant part of foreign direct investment is channeled through cross-border M&A. So I'll give a bit of a view of how the market has evolved, given the recent changes and the recent trends. And I'll focus my discussion mainly on the mid-market. So that would be companies with an enterprise value of under 500 million, which is where we at Caixa are most active as a financial advisor. Okay, so first of all, to start with, I've put there the evolution of cross-border M&A volume globally. So that shows that it pretty much follows overall the global economy with troughs in the relevant recessions. And it also follows reasonably well equity prices. So I've overlaid over there as a gray line the S&P 500. That is quite true until the recent years, where that relationship is a lot less relevant. And a very significant factor is obviously the geopolitical tensions and how outbound Chinese cross-border M&A has evolved. So this is a striking change from 2017 onwards. There is a very significant decrease in outbound M&A from China. These numbers are from the United Nations Conference for Trade and Development. So these are net values. So that is acquisitions minus divestments. If you take other sources of information where you see the gross value, the numbers are similar. I think there's two main reasons. Obviously, one, the restrictions that have been placed on Chinese acquirers in the US and in the EU. And also there's an item in relationship to the leverage that some of these Chinese acquirers had taken on, which was very significant, so they had to make divestments in order to reduce that amount of leverage. It's important to note that this is a very different picture to that of FDI, Chinese outbound FDI. That is quite different. That is actually 70% higher in the last 5 years. So it's very different. It's very different also due to the locations where the Chinese are directing their investments. If you compare that to the overall market, this would be the total aggregate value of M&A globally. You see that 2021 was an excellent year. There were very high volumes. A lot of that was due to the increase in activity, that the overhang from transactions that in 2020 had been delayed due to COVID. But 2022 has obviously been very different. In 2022, there's been a significant reduction from the second half of 2022 onwards. And that is obviously due to the war in Ukraine, the rising interest rates, the inflation, and obviously the global supply chain disruption that had taken place. So over there, shown there, the global supply chain pressure index as calculated by the New York Fed. And that shows how the situation has reasonably reverted, though there are still some signs of tension. For example, the European Commission surveys for the number of firms reporting shortages have come down from the peak. In the case of Spain, the peak was at around 30% of companies reporting shortages, and that has come down to around 20%. In the case of Germany, that was at a peak of 90%, and that has come down to about 60% more or less. So there's still some tension in the system. And for example, automotive manufacturers are still, some of them are still reporting shortages. So what has been the impact on transactions from all of this? Well, I think, obviously, all this uncertainty has caused a lot of difficulties in projecting companies' P&Ls. So we have had a lot of difficulty in projecting the revenue streams in terms of volume, in terms of price, in terms of cost. There's been tremendous uncertainty in how much they could pass through the inflation they were suffering. In terms of finance costs, there's been very relevant uncertainty. So the first thing that this has caused has been significant delays. So we have seen many transactions where, for example, we were about to close a transaction in April last year. The war in Ukraine generated a very significant spike in grain prices. This was frozen food manufacturers, and this has been delayed continuously as the acquirer was reviewing the current trading of the company. So that would be the performance of the company month to month and how that was evolving. They weren't sufficiently clear about how this was going to be resolved, and the processes have been delayed very significantly in many times, in many of the cases we have been working on. The second relevant change has been the much more complex nature of negotiations between buyers and sellers. So there's been a significant generation of an price expectations gap between buyers and sellers. So basically, obviously, buyers have re-rated their expectations, have brought them down quite significantly, and sellers have maintained their price expectations from prior to this situation. And this has generated more complex negotiations and a much larger amount of value being moved from the initial transaction value into contingent payment schemes such as earnouts or other variety of contingent payment mechanisms. And lastly, very significantly for this forum, there's been a significant regionalization of transactions. So when we speak to acquirers and decision makers, many of them have decided to look closer to home and look in their own jurisdictions as opposed to being more adventurous. And we see this in the numbers. For example, the European Union M&A market used to be around 30% of it used to be from foreign, so from non-EU acquirers, and this has come down significantly to around 15%. So it's actually been halved. And if you looked at the Chinese or the Indian market, these have become mainly domestic markets. So I think it's also very important to note the relevance for this market of financial sponsors. So financial sponsors are a key driving force. The amount of capital they have raised and have ready to deploy is very significant. This has doubled in the last 5 years, and they are very relevant driving force in the mid-market. And that is because they have the capacity to follow the strategies to build pan-European leaders in a certain niche. So it's something that we see quite often, well, regional leaders in a certain niche. So it's something we see quite often, that mid-market firms have difficulties in performing cross-border acquisitions. They often do not have the expertise or the knowledge or the capital, and private equity firms can often be a form of transition from entrepreneurial small and medium enterprises into larger industrial corporates. So private equity firms are very relevant, and in general, financial sponsors. They can be private equity firms or it can be infrastructure funds, have also been very relevant. So in terms of the Spanish market, these are the numbers for the global, in terms of value, as published by the ministry. A lot of these are performed by the very large corporates, the IBEX corporates. In terms of the mid-market, I think it's a lot more relevant to look at the number of transactions performed in each period. So as you can see, that is if you see the bottom line there, this one would be the number of transactions performed. And as you can see, this has a very significant spike in the last couple of years. So there's been, in that sense, there is a tremendous increase in activity for cross-border transactions in Spain. It's fair to say that there is a little amount of noise in those numbers. So a situation that occurs more often now is when a foreign limited partner to a Spanish fund co-invests with a Spanish fund. And this happens more often nowadays. And this generates a little noise in the numbers, so they're possibly a little overstated. But it's still fair to say that there's been a very relevant increase. And if you take the percentage of Spanish targets purchased by foreign acquirers, which is the other line, this other line, this has grown significantly from low 30s to around 50%. So that is a significant change in the market. And if you take the number of outbound transactions, so those are Spanish firms buying abroad, this also shows a significant increase, albeit at lower volumes. By geography, I think this is pretty much as expected. So there's a lot of European acquirers, and there's a period where there's significant investment by the Chinese. And for the outbound, Latin America has a very relevant pattern. In terms of sectors, I think it's a lot more interesting to analyze these because there's several sectors that have become very, very relevant in the number of acquisitions. For example, there's two that I'd like to highlight. One would be technology, tech, and the other would be energy. So in terms of tech, the whole drive of digitalizing the economy is having a tremendous impact on the number of transactions that are taking place and on the investment that's taking place. So if you take, for example, public cloud spending, that has increased from around 0.7 billion in 2019 to 1.4 billion. And this is obviously driving a lot of investment. And there's Spanish companies buying abroad, like Telefónica Tech is buying quite a number of companies in the UK and in Germany and in other European jurisdictions to buy capabilities, especially in Microsoft Enterprise Resource Planning software, that they can then cross-sell to their 5.5 million business-to-business customers. And there's also a lot of private equity build-up stories. For example, there's a Norwegian firm called Visma, which is an investee of HG Capital, and they've been tremendously acquisitive. They've done over 50 transactions in the last 2 years, several of them in Spain, and at very significant prices, and for very specific products, wanting to sell them across the rest of Europe. And in the case of the energy sector, there's a whole host of transactions. I think many of these are basically generation photovoltaic assets, or, well, mostly photovoltaic assets. Some are wind, but mostly photovoltaic assets. Previously to 2019, they used to be regulated assets, so assets that had a feed-in tariff. This has changed due to the grid parity that photovoltaic assets, generation assets, have reached. And there's been very large transactions with portfolios being bought by foreign investors. I'd like to highlight another type of transaction, though. There's been several transactions where there has been platform transactions. And by platforms, I mean portfolios that come with the teams that can develop them and that can develop further portfolios of projects. So there's two relevant transactions. There's one by Verben, the Austrian utility, who bought a platform. They tried to buy Eolia, which is a large Spanish developer, but they were outbid by Engie. And they then had a tailor-made transaction for them, which was the platform for developing renewable assets from Q Energy, and they bought that. And the other one was SSE, which is the old Scottish and Southern, who bought the platforms from Siemens Gamesa. And that has a more broader type of assets, especially wind assets. So those are utilities buying the capabilities in Spain to be able to develop these portfolios and their transition into green energy. And then in terms of the value chain, I think there's also one transaction that was worth highlighting, which is the purchase by Raytec of STI in Ireland. ST Norland is a solar tracker manufacturer. So solar trackers would be what tilts the panels so that they follow the sun. And ST Norland was a top 10 Spanish producer. And that was bought by Arraytec. When the motives that Arraytec gave, which is a US company, and the motives that Arraytec gave were that they, one, wanted to diversify the supply chain to mitigate the significant costs that they were incurring. And these are very relevant for them because renewables tend to be installed by fixed price contracts and fixed term. So you suffer significant penalties if you are delayed or if your input costs are superior. So that was one of the reasons. And the other significant reason was entering the Brazilian market. So the Brazilian market was growing very significantly and has local content restrictions. So they weren't able to enter that market on their own, and they needed something that was already there, and they would help it grow. So this comes in with the trade restrictions that some countries have put in place. Okay. So I put here in terms of the strategic rationale for companies performing these acquisitions. So this is sort of a variation of an answer matrix, so as to provide what the strategic reasons for performing acquisitions has been. So on the horizontal axis, I put whether the primary intention of the acquirer is looking for the market, so is entering a market, or whether it is buying and finding a resource or a product. Admittedly, it could be both, so sort of I'll put that in the middle. And in the vertical axis, I've put whether these are horizontal transactions, in the sense that they're in the same industry, or vertical transactions in the sense that they are moving one step behind or ahead in the supply chain. So I must say that in terms of SMEs, what we see is mostly horizontal transactions. I think it makes a lot of sense because these companies, by definition, are not that large, number one. And number two, the minimum efficient size of the position adjacent in the supply chain needs to be relatively small for them to be able to afford it. And that obviously does not happen that often. So in terms to give a few examples, I think in terms of consolidating fragmented markets and utilizing better technology, we tend to see a lot more pan-European private equity build-up strategies in this sense. And to give an example, we were advisors to a company called Modumac. They're a specialist in the automation of logistics warehousing. And they were bought by a German company called Skio, who is an investee of Quadriga Capital. And they are performing build-up in Europe to create a leader in that niche. In terms of product, we tend to see more corporates. And to give here another example, there's another company where we were advisors, which is called Safi Pumps. They're specialized in swimming pool pumps. And they were bought by Pedrolo, which is an Italian industrial pump manufacturer with a significant presence in the US. And they wanted specifically this product. They wanted to have this additional product in their portfolio so they could cross-sell it to their US customers. And then we get to the sort of the supply security case, which is something everybody's talking about right now. So we talk a lot with clients about how they manage this, and it is often the case that they tell us they're trying to diversify the supply chain, look for new suppliers, enter into service level agreements with them, to find ways so that they can mitigate the disruption that has taken place. There's question on whether this is something which will be more temporary or whether it's really structural. After all, these companies, they do have to compete, and those supply chain relationships often take a very long time to be instigated. So two sectors that clearly have structural dynamics would be pharma and PV manufacturing. So pharma, there's a lot of production of active pharmaceutical ingredients takes place in China and India. About 60% of production is based in China and India, while consumption is much more US and Western Europe based. So there's a clear drive to pull that towards Europe and have a greater supply security. And when we talk to active pharmaceutical ingredient manufacturers in Spain, they often tell us that nowadays, because many of their clients want to diversify their supply chains, that they're willing to pay 20 or 30% more for the product compared to maybe an Indian or a Chinese manufacturer. In the case of PV, I think this is an interesting case because this is very much a Chinese-dominated industry. So if you take the different stages of the PV production, from the wafers to the cells to the modules, most of this is about 80, 90%, depending on which segment you take, dominated by Chinese companies. If you take trackers and inverters, there's several top 10 Spanish companies. But if you go further back in the supply chain, they're mostly Chinese. There's only one significant firm, a European firm, in the polysilicon manufacturing, which is Wacker, and the rest of it is very much Chinese. Now, there is obviously a huge drive to invest in PV, and there is the recognition by the European Commission that this dependency is too great. So recently, the European Commission announced a proposal for the Net Zero Industrial Act, where there would be a target for 40% of production, of manufacturing production, to be EU located by 2030. Now, this is a very big change, obviously, because we're starting very much from zero in many of the different segments, but we expect to see a lot of activity here. And to give some examples, Iberdrola, for example, has entered into a joint venture with a Spanish company called Exiom. Exiom is a manufacturer of solar modules, which admittedly is the least capital-intensive and least energy-intensive part of the process. But they have entered into a JV to start manufacturing modules in Spain. And there's quite a variety of other companies within the European Union which are moving from different segments into these. For example, there's a company called Meyer Burger, who are a German company specialized in manufacturing equipment for making wafers and solar cells, that have moved to the next position in the supply chain, and they're actually building a plant themselves to produce cells and wafers locally. Of course, part of the problem here often is the minimum size you need, which the further upstream you go tends to be larger, the minimum efficient size, and also the need for relatively cheap power prices, which is obviously a key concern nowadays with the situation of power prices. So just to talk very briefly just about, compared to a greenfield transaction, why and what are the pros and concerns for the acquirer in this sense. So I'll just say, first of all, the key advantage for a greenfield transaction would be, for an M&A transaction, would be speed. So obviously in a fast-moving and changing environment, having the possibility to acquire a firm rather than building it up with the potential for significant delays, fast starts, the difficulties so often in acquiring talent will obviously give an M&A transaction a significant advantage. Of course, you have to pay a premium, especially recently where prices have been relatively high. And in this sense, in terms of prices, obviously foreign acquirers will have less experience of a market, so they're potentially likelier to understand worse how prices have been set in present transactions, especially if securing synergies. So most of these transactions, there will be a low element of cost synergies, which tend to be easy to quantify and relatively easy to execute. And there will be revenue synergies, which are a lot harder to quantify and definitely a lot harder to execute. So that will be a significant difficulty. And then another couple of items relevant, I think, would be, well, identification of targets is obviously an issue because this can be a significant endeavor. And more importantly, there is integration. So cultural issues tend to have a significant effect on what the expectations of the parties are and how these are finally executed and how they come about and whether the actual resulting company is exactly as was expected. Okay, just very briefly, from the point of view of the seller, just mention a couple of points. So for a selling company, there's also some differences as to whether the acquirer is domestic or foreign. So number one, a key concern for many business owners is where confidentiality in an M&A process. So they're very concerned about who is aware of a potential transaction, and they're obviously very concerned about whether their direct competitors are aware of it. So obviously, with a foreign acquirer who you do not compete with on a day-to-day basis, you have greater degrees of confidentiality. Though I think generally there are ways to mitigate it. There are many ways to mitigate this, and advisors can generally find ways to advance in a process without incurring excessive risks in this concern. The second point I think worth mentioning is that a domestic firm will have a clearer understanding of the day-to-day running of an industry in general. So foreign acquirers will tend to be a lot more jittery about gray areas. So potentially there will be more stringent due diligence, and this can impact and give you lower deal certainty. In terms of structure, I think there may be a significant difference also. It is not always the case, but it is often the case that foreign acquirers will require the seller to remain for a certain period of time, either as management or as a minority equity holder. So in this case, we'd be talking about two-stage transaction. Number one, they buy a majority stake, and there would be put and call options for the remaining minority stake to be transacted at a later date at a set price. And of course, in recent times, we would have regulatory approvals necessary if it was a non-EU acquirer. So from my side, that would be what I'd want to say. So basically, just very brief bit on the marketing bit from our side. So we, as advisors, we are a team of 90 professionals in the corporate finance team. We've done over 40 transactions between 2019 and 2022, and 65% more or less of these have been cross-border. So it's something that we do very often, and we have a lot of experience in. And these transactions have an amount of around 5.5 billion euros. And this is sort of the sector we specialize in, the small and medium enterprises and the mid-cap. So from my side, that would be all that I'd want to share with you. Thank you so much.